Good morning, students. So today we will discuss about merger and amalgamation. It's a topic in your corporate accounting. So mergers and amalgamations. Students, you must have heard these terms a lot. So we will discuss these terms today. Let's begin with our concept of merger. Merger, like modern businesses, they use mergers and amalgamations to survive competition and to expand globally. Let's understand what's the meaning of merger is. Like in the example, it is written that it's a combination of two firms and only usually the larger one survives. In case of merger, only one firm survives, usually the larger of the two. So if I talk about, example of merger, good example would be of HDFC Bank and HDFC Limited. In 2023, HDFC Limited merged into HDFC Bank to create a stronger financial institution. Vertical merger. Vertical merger, students, in this vertical merger, usually companies at different production stages they combine. Like Reliance Industries acquiring retail, supply chain businesses, right? That is vertical merger. It's a combination of firms at different stages of production for the same end product. And if we talk about conglomerate merger, in this case, companies from different industries, like in the example you can see food corporation, auto parts and power supply. So like Tata Group expanding into airlines, technology, hotels, steel, that's example of conglomerate merger. Moving to our next, that is horizontal merger. I'll directly give you the example of Vodafone India and Idea Cellular. That is the biggest example of horizontal merger. In this case, two companies involved in the same business, they combine, right? In the same industry, similar business, they merge. And main goal is to avail the benefit of economies of scale. Economies of scale usually means like when you produce on a large scale, you can avail the benefit of reducing average cost per unit. That is the economies of scale benefit. So this is all about merger. And if we talk about amalgamation, I'll give you one example. Amalgamation, biggest example is formation of Vodafone Idea. In this case, two companies, they combined operations under a new identity, new structure. Similar companies combine. Why they combine? To avoid competition, right? Two or more companies, they go into liquidation and one new company is formed, right? That is the case of amalgamation. And objectives of these amalgamation is basically to increase market share, to reduce competition, to expand business and improve profitability, right? So features like we have just discussed in the definition, two or more companies, they go into liquidation, one company is formed, new company is formed, right? There are two methods. One is amalgamation in the nature of merger and another one is amalgamation in the nature of purchase. In the case of amalgamation in the nature of merger, all the assets and liabilities of transferred company, they become the assets and liabilities of transferee company. Shareholders holding at least 90% of the paid up share capital, they immediately become the shareholders in the transferee company. So these were the certain features. If they are not present or if they are not fulfilled, then it becomes amalgamation in the nature of purchase, right? If there is adjustment in the books regarding the value of the assets and liabilities, reserves are generally not carried forward except specific ones. Whereas in case of amalgamation in the nature of merger, all the reserves are carried forward. So if one of the conditions of amalgamation in the nature of merger doesn't get fulfilled, it becomes amalgamation in the nature of purchase. So